JP Morgan was the last major financial institution that predicted a recession in the United States in 2023, although soft. Joining bank giants such as Bank of America, which make similar forecasts even when inflation in the country began to show signs of a slowdown. Angel Swert Finance. Economists at JP Morgan expect the US economy to contract by 0.5% in the fourth quarter of 2023, with the slowdown continuing through 2024, Reuters reported. The recession forecast is based on a forecast that the Federal Reserve will continue to raise interest rates by another 100 basis points until March 2023. 77% of fund managers believe a global recession is inevitable. The Bank of America poll showed that the majority of fund managers believe that the US will be able to avoid the worst effects of the global recession, which they predict will have a greater impact on the Eurozone and the UK. Morgan Stanley's report was slightly more optimistic, predicting that the US economy would just ride out the recession in 2023, while the labor market continued to suffer a severe downturn. The Federal Reserve will continue to raise rates until the economic damage from rate hikes becomes apparent. What affects the recession? Morgan Sue Jamie Dimon has warned that both the US and the global economy will slide into recession in 2023 due to a combination of factors such as the ongoing war in Ukraine and higher rates by central banks. Dimon believes that everything is still in order and the economy can come out of this better than in 2008. Economists at JP Morgan are forecasting a growth in US GAAP in 2023, nearly half of the forecast for 2022. Leading Wall Street strategists tell clients how they see the stock market moving next year. The pros are extraordinarily cautious this time around, and most of them expect the SUT to end 2023 lower than it is today. These strategists' predictions are accompanied by hundreds of pages of research and analysis. Many believe that earnings forecasts for 2023 have more room for the decline, and some believe that these downward revisions mean more stock volatility in early 2023. Wall Street Equity Forecast. Wall Street is unusually skeptical about 2023. To sum it all up, strategists expect an erratic first half to be followed by an easier second half, which could lead to a slight uptick in the stock. Below is an overview of 16 of these ZEP 500 predictions for 2023, including highlights from strategists' comments. Barclays $3,675 per share. Societe Generale $3,800, UBS $3,900, BofA $4,000, Goldman Sachs $4,000, ZAG $4,000, Credit Suisse $4,050, REP $4,100. The range of forecasts this year is quite wide, so different polls give very different results. First, don't get hung up on these yearly goals if you don't have to. To predict with any accuracy where the stock market will be in a year is incredibly difficult. It is necessary to take into account the unpredictable events that occur along the way. Strategists often revise their goals as new information becomes available. For most of you, it's probably not a good idea to review your entire investment strategy based on a yearly stock market outlook. Second, most stock strategists conduct incredibly thorough, high-quality research that reflects a deep understanding of what drives the markets. The most valuable things these professionals have to offer have little to do with annual goals. Many experts make predictions because customers like them. Don't discount all of their work just because their yearly goal isn't true. Angel Swert Finance.